Let's go across. I think Mohit has the management of ZEE Entertainment with him.
We're talking to Mr. Atul Das, Chief Strategy Officer at ZEE Entertainment Enterprises Limited. Good having you on the show with us, Mr. Das. Very good set of numbers. You've maintained steady margins and growth, both top line as well as bottom line. Can you take us through quickly in terms of the key highlights of these results?
Yeah, so we have declared our first quarter numbers, and they have been fairly exciting. So if you look at our consolidated operating revenues, they have grown by 21% YOY to 8.43 billion rupees. And our advertising revenues in this period have grown by 18% to 4.47 billion rupees. And if you look at the other stream of revenues, which is subscription revenues, they have grown by 19% and going up to 3.64 billion rupees. So that's been a very, very strong performance coming from our both from our domestic markets as well as our international markets. And if you talk about our operating profits, then the EBITDA margins have been very strong at 27.7%, and the EBITDA numbers have been at 2.3 billion rupees. Therefore, a very strong improvement in margins as compared to fourth quarter of last fiscal. And overall, I think our strength has been coming from our gain in market share, which has been across the properties. If you look at the performance of Hindi GEC or some of our regional channels or also the cinema channel, we have seen a very strong improvement in market shares. So while ZEE TV, for example, 2 quarters back was in the 160-170 GRP zone, today in the last week, as the numbers have come out, 252 GRPs have, ZEE TV has come up with those numbers. So improvement has been substantial, and that has reflected on our revenues as well. And similar has been the performance across the genres in regional segment also. And we have several of our properties which are now inching towards the number 1 mark. So we are very confident that as we go into the year, we should improve our performance.
Mr. Das, the other thing, of course, is the sports business, and that has tend to drag earnings a bit, at least because of the losses in that business. What's the outlook there? By when do you expect to actually turn around the sports business?
See, sports business has been one of those segments which we are still investing in, and last year we saw a huge improvement in fiscal 12 over fiscal 11 numbers as far as losses are concerned. It's still making losses, but the improvement has been substantial, and we are confident that the losses would further come down in fiscal 13 as well. So from a number of about 148 crores of losses in fiscal 12, we should see a substantial improvement in fiscal 13. And if you look at the first quarter numbers, we have reported revenues of 92.2 crore rupees in the first quarter and losses of 21 crore rupees. But despite the losses of this sports business, we have seen operating margins at 27.7%. So if you strip out the sports losses and look at our non-sports margins, which is like one steady state of business, then they are at 34% plus, which is probably at the top end of the industry.
And the other thing, of course, is obviously the entire digitization rollout, and everyone is, anticipating how that could have a positive impact for the industry. What's your sense in terms of, the impact on it could have on margins and also, of course, on subscription revenues for you?
See, digitization is a positive development for the entire industry, whether it's for MSOs or for broadcasters or for consumers. Consumers get a lot more choice. They get much better quality of television signals. They get high definition channels. So it's really good for them. But more importantly, as business, it really works very well for broadcasters because we get a proper declaration of the subscriber base, and we are looking forward to the right implementation of the digitization. And as you know, the first phase is in the 4 cities of Mumbai, Delhi, Kolkata and Chennai, which was supposed to kickstart by June 30th, which has now been pushed back by 4 months to October 2012. But we are very positive that digitization would come about and it will have very positive implications for our revenues, because as digitization actually rolls out in the country, there will be a substantial number of subscribers who would choose maybe digital cable and some of them will go for DTH as an option. We have seen in the past 7-8 years since DTH has been around in India that about 45 million plus subscribers have chosen DTH on a purely voluntary basis because they find the signal quality better, they find the services better. And needless to say that as digitization rolls out in the rest of the country from a mandate perspective, it'll have a lot more positive vibes, in terms of revenue realization for broadcasters, and ZEE would definitely be on top of the curve for that.